So let's talk about the recent breakup. Not mine, but about Alibaba and its payment app. So I actually had a slew of content that I intended to cover over the coming week or so regarding BlackRock investment versus George Soros. And there was also a video that was quite interesting about Kevin Rudd, which was one of the former Prime Minister of Australia. And as some of you might know, the relationship between China and Australia is a very unique and a very important one. Because like the saying goes, if China sneezes, Australia will catch a cold. So essentially speaking, I think Kevin Rudd also has a very unique and a very pertinent point of view and perspective about China that we ought to know as investors. And also some of my opinions and commentary about some hedge funds out there called RV Capital, and also some Seeking Alpha articles. But that aside, all this can take a back seat honestly, because ultimately there's this breaking news surrounding Ant Financials, and more importantly, the financial arm of Alibaba. So in this case, I really just wanted to take the time to walk you through what are the recent developments and what are my key opinions and thoughts on how it is going to affect Alibaba as an entire company. So before getting into this video proper, I do have a disclaimer. Currently, this entire engagement and this ongoing development of the regulatory requirements and clampdown of Ant Financials and how things are exactly playing out is not really made very explicit, and the entire situation right now is quite iffy. So I can only provide my opinion and based on the facts or based on the news that I read as of the recording of this video. And I will not expect the entire analysis to be holistic and to be all-encompassing. So you do have to take it with a pinch of salt, and I'll really just be discussing about some of the thoughts and the initial arguments against and for Alibaba and for Ant Financials. On top of that, I also postulate that this will be a two-part series where I will first be talking about the recent developments and how all the headline news are surrounding Ant Financials. And the second part will be focused more on the entire regulatory crackdown and how they want to have a joint venture and really what is this credit scoring system thing going on in China and what exactly does it mean. So in this first part of the video, I'll just be of course explaining some of the headlines and to draw your attention to one of the very interesting report that I recently encountered, and shout out to FT Yefferberts, or I don't know how to pronounce your name, on Discord that showed me the way and enlightened me with this entire report existence. So right now in the Hong Kong market, Alibaba essentially just plummeted down a good 5-6%. And there has been a lot of news regarding this entire breakup of Alibaba's payment app, which is Ant Financials. So essentially, they wanted to achieve a divorce between Alipay, which is its payment processors app, and its credit arm, which is Huapay and Jiepay. So essentially, before this news, both arms of Ant Financials actually coexist and they exist in the same app. And because of the convenience and because of the product superiority in this case, it really allowed Ant Financials to have a very huge moat in ensuring that they lock their customers into their own ecosystem. And let's get right into the news that are speaking about this incident specifically. So BBC News states that Alibaba slides on report, China plans to break up payment apps. So regulators want to break up Alipay, which is China's biggest payments app with more than 1 billion users according to the Financial Times. And Ant could also be forced to hand over the user data that underpins its loan decisions to a new credit scoring firm, which would be partly state-owned. The business empire of Jack Ma, the co-founder of both Ant Group and Alibaba, has been hit by a series of high-profile regulatory measures. So Chinese authorities started to show increasing interest in Ant Group in October last year after Mr. Ma criticized regulators. Honestly, for those of you who have been following my channel, really it isn't a personal vendetta of Mr. C trying to go against Jack Ma. It's really the entire problem of an industry that they wish to crack down into, and Ant Group just happens to be in the financial industry, which is quite a sensitive topic and quite a sensitive industry to be dabbling in. This entire article is extremely short, so there really isn't anything substantive or anything of substance that we can go through. Next, let's look at MarketWatch. MarketWatch states that Chinese regulators look to break up Ant Group's Alipay. Chinese regulators are seeking to break up Alipay, the popular payment app from Jack Ma's Ant Group. According to FT, Financial Times, regulators want Alipay to create a separate app for its loan businesses and turn over user data for a new credit scoring joint venture. Alipay now will no longer be able to check customers' credit worthiness internally, and you have to rely on outside credit scores. Alipay will not be China's only online lender affected by the change. And this is also an extremely short article. Next, if you were to look at SCMP, which is South China Morning Post, Alibaba, Tencent, sink Hong Kong stocks after report on Ant Group breakup, reignites regulatory worries. So Hang Seng Index dropped 2%, and Alibaba and Meituan lead losses after the Financial Times said Chinese regulators are seeking to break up Alipay. So now, Ant Group will also be asked to turn over lending data to a new credit scoring venture. So honestly speaking, this entire article doesn't really provide any form of insights or anything really important that really make or break the entire argument, and for us to have a deeper understanding and appreciation of what's exactly happening in China right now. So like I said, a very huge disclaimer that I want to put forth right now before we proceed on about my own opinion is that there are a lot of things right now that a lot of people do not know, especially investors. So whenever there's uncertainty, there's volatility, and as long as people do not know what exactly is going on, they will just assume the worst case scenario, and that is also why it's reflected evidently in the entire share price itself. So of course, as you can see in the 3 different articles, BBC News, Market Watch, and even SCMP, they've been constantly talking about this new credit scoring venture, and it will be a joint venture with specific government entities. And that will be discussed more in the second part of this video, or the second part of the series of this video. And they are essentially talking about it based off a Reuters article, which I will be discussing more in depth in the second video. But for this video specifically, I really just wanted to have a qualitative aspect and a qualitative slant to this entire scenario, and how would it exactly affect Ant Group. So there was this very interesting research report done by SCMP, and it's supported by Raise Capital, and I will definitely leave the link in the description box down below. So for us, specifically for the fintech arm, let's jump to page 17. And in page 17, of course, we know that this kind of reports usually have very nice layout, and I really commend them for that and really thank them for helping us summarize and have a better appreciation of what exactly is going on. So in this case, in this entire fintech regulation space, I think there are 3 policy objectives that CCP is intending to achieve. So firstly, they talk about a lower systemic risk in the financial system. And like a lot of people have been speculating, and like a lot of people have been seeing how Huarong, which is one part of the financial system, experienced a huge turmoil over the last few months. And also, Ant Financials, which is acting like a pseudo bank, is also part and parcel of this entire financial system in China. And in order for China as an economy to prosper and to mature, they do have to have a solid financial foundation. If not, no investors would be interested in investing, or without a proper foundation of any financial system, and it doesn't show any signs of maturity, nobody would dare to dabble themselves in any kind of investments or any kind of speculations in the entire market itself. So they did talk about the 2 specific requirements the regulators are focusing their efforts into. One is the creation of a FHC, which is a financial holding company, and number 2 is the higher requirement for online micro-lending. So specifically speaking, why is the Chinese regulator so obsessed in Ant Group trying to name itself between a fintech company or just a regular bank? I think the main issue is really concised in the first requirement, where by allowing and by ensuring Ant Group to become a regulated financial holding company will allow a better oversight by all the different regulators. Because prior to this entire clampdown, an Ant Financial or Ant Group in this case really isn't a bank, and they are technically not really a lending firm as well. And they have been constantly muddling through in a grey area, and nobody really is sure what kind of regulations are Ant Group subjected to. So in this case, it's really a very problematic issue for regulators to enforce any kinds of regulation. So Ant Group will have to recategorize itself and ensure that they are subjected to all these different regulations. And on the second point, on why is it important for them to meet this kind of requirements, and because of this new branding and this new categorization of Ant Group, they are required to conform to more robust regulations, such as a higher capital contribution and also a reduction in the loan sizes. So some of you might be extremely dumbfounded. Why is this even important for the Chinese regulators to be bothered about? So as some of you might not know, as of June 2020, Ant Group actually only contributed 2% of the joint loans with the banks. So in this case, it really just translates to all the different risks being borne by the bank, and Ant Financials or Ant Group in this case is really just a fintech bridge between the consumers and the banks. And the high amount of default risk from the consumers are solely borne by the bank, and Ant Group just happens to be the middleman without taking on any forms of credit risk. And on top of that, it runs the risk of collapsing the entire financial system because of this kind of haphazard or frivolous lending in this case. But of course, I would choose to believe that Ant Group has a proper framework internally, and they do not just lend money in a haphazard fashion. But of course, from the Chinese regulators and the government's point of view, they do not share the same thoughts as Ant Financials. And of course, we need to take into account the probability of the entire financial system collapsing. So that is one of their main concerns, and why are they trying to rein back Ant Group in this case. Secondly, about the end of market dominance, I think I do not really need to go very in-depth into the point. Most of you should have already known the entire ecosystem Alibaba has created based on the Iron Triangle, which is the e-commerce arm, the logistics arm, and the financial arm. And in this case, in the financial services industry, they have created a huge amount of moat in terms of convenience, in terms of the ability to undercut a lot of their opponents. And in this case, it is kind of deemed as a monopolistic behavior because there really isn't any forms of fair competition. And from the consumer's point of view, they really do not have any other choice. And thirdly, about promoting financial inclusion, I think there has been an increasing amount of concern, and I think the regulators are also looking at a cap on the interest rate for loans from non-bank lenders. And I think some of you might have the question in mind, hey, isn't it good to have more liquidity in the system and allow more people to borrow more money and to ensure that the entire system is well oiled? I think in this case, where most of the loans that are dispersed by Ant Financials aren't really very regulated, and most of them are considered unsecured loans. So the difference between a secured and an unsecured loan is that a lot of people that use their lending platform, which is Huapei and Jiepei, usually do not have to pledge a certain form of asset, like a property or jewelries and stuff like that. So in this case, unsecured loans are really of a very high risk profile, and there is a lot of default risk in the case where the consumers just don't pay up. And at the end of the day, it's really the banks that are issuing out these loans that are bearing all these different risks. And Ant Financials is really just trying to help facilitate the entire transaction. So ultimately, if the entire cycle continues on infinitely, it will inevitably create an entire bubble of debt, and ultimately the government will have to bail everyone out. And I think that's the most undesirable outcome from the Chinese government's perspective. So if you were to look at the entire crackdown, I think most of the objectives that the Chinese regulators have set forth is of a very sensible metric and benchmark. But that said, as Alibaba shareholders, it will definitely affect the short-term trajectory and short-term optimism and outlook of Antpay. And in this case, by extension, Alibaba Group Holdings do own a 33% stake in Ant Financials. And with that said, of course, in the long run, they're just trying to make the entire Chinese financial system a lot more sustainable. Like one of you in the Discord chat rightfully pointed out, even though we know that as investors, all these are sensible metrics and in the long run beneficial to the entire Chinese financial system, in the short run, it's definitely going to cause some pain. And I would also have to admit that Ant Group in the short run is going to be affected by this entire regulatory crackdown. Any logical thinking being would know that whatever they've been doing, they have been reaping a huge amount of profit, and they have been kind of exploiting the loophole of the system. And the Chinese regulators are now trying to patch up the loophole. And so with that in mind, definitely there will be a slashing of valuation for Ant Group. But to what extent, and the ability of Ant Group to bounce back from all these regulations and having the ability to work out something even more superior, having product superiority over the rest of the other competitors, is still left a question mark. I think a key part of the entire equation that a lot of investors are missing out is that they assume that a lot of all these regulations, after being introduced into the entire system and introduced into the entire industry, they feel like the top executives of all these big tech, Chinese tech companies are like sitting ducks and lame ducks. They do not have the ability to come up with something even more innovative or something to circumvent all these different regulations, and even better still, work with these new regulations and come up with something even more profitable. But that said, nothing really concrete is being discussed in a lot of the articles being put out. Ant Group in this case has not made a public stance on what are their opinions on the current crackdown. And in the second video of this series about Ant Financials and Ant Group, I'll be discussing a little bit more about the entire situation in China, about the leverage risk, the systemic risk, and how are they intending to curb this entire problem and what have they been doing. And also, I'll be discussing about this new joint venture credit scoring system. So with that in mind, for those of you interested in joining me in this journey, please remember to subscribe to this entire channel, and I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!